Tonight, the global economy is reeling from a shockwave that few could have predicted just days ago. Around the world, investors, politicians, and ordinary citizens are watching events unfold with a mix of disbelief and anxiety as the very foundations of international commerce are shaken. It all began with a single, audacious demand from the White House, one that has sent ripples through every major capital and trading floor. President Trump has dramatically tied the economic fate of 8 major European nations to his bold ambition of purchasing Greenland. In a move that stunned diplomats and economists alike, he's threatened sweeping tariffs and a full-scale trade war if his demands are not met, turning a diplomatic curiosity into a global crisis. The result? Financial markets are in turmoil. Investors are abandoning U.S. assets in droves, seeking safety in gold, government bonds, and even foreign currencies. Stock indices have plummeted, and the volatility is unlike anything seen since the last global recession. The post-war economic order, painstakingly built on decades of cooperation and trust, is trembling on the edge. The alliances and agreements that have underpinned prosperity for generations now seem fragile, threatened by a single geopolitical gamble. For American consumers, the impact is immediate and personal. Prices on European goods, from luxury cars to everyday groceries, are rising sharply, straining household budgets and fueling uncertainty about what comes next. Meanwhile, across the Atlantic, European workers are gripped by fear. Factories face closures, exports are threatened, and the specter of mass layoffs looms over entire industries. The United Kingdom, already struggling to find its footing in a post-Brexit world, now faces the very real possibility of being pushed into a deep recession by these sudden tariffs and economic shocks. In Brussels and other European capitals, leaders are scrambling to craft a unified response. They're caught in a high-stakes balancing act, trying to avoid a devastating trade war, while refusing to bow to U.S. coercion and protect their own sovereignty. The world's financial markets remain on edge, with wild swings and deep anxiety reflecting the uncertainty of this unprecedented standoff. Every headline, every tweet sends shockwaves through the global economy. This is far more than a simple tariff dispute. It's a battle over power, sovereignty, and the very future of the global order. As the world watches, the stakes could not be higher. President Trump's second term is defined by an aggressive America First policy, one that has fundamentally reshaped the way the United States approaches global commerce. Unlike previous administrations, which often sought compromise and multilateral agreements, Trump's strategy is unapologetically unilateral, prioritizing American interests above all else, even if it means upending long-standing alliances or global economic norms. At the heart of this doctrine is the wielding of tariffs, as the administration's primary tool. These tariffs are not just a negotiating tactic, they are a central pillar of Trump's economic vision, used to protect domestic industries and punish countries seen as unfair competitors. This marks a sharp break from decades of bipartisan support for free trade, a philosophy that has underpinned U.S. economic policy since the end of World War II. For generations, both Republican and Democratic leaders championed open markets, believing that global trade would foster prosperity and peace. Now, sweeping tariffs averaging 15% have been imposed across a wide range of imports. The administration argues these measures are necessary to reshore American jobs and industries, revitalize manufacturing, and reduce the nation's dependence on foreign supply chains. Supporters say this is a long overdue correction to decades of offshoring and trade deficits. But the administration's bold, unilateral moves have fractured global trade. Many countries, wary of unpredictable U.S. policies, are forming new regional blocs and seeking to reduce their reliance on American markets and technology. The world trading system, once anchored by U.S. leadership, is now splintering into rival camps. Recent threats, such as the possibility of taking control of the Panama Canal, have further emboldened the White House. These dramatic gestures are intended to project strength and deter adversaries, but they also risk escalating tensions with both allies and rivals. However, this confrontational approach has come at a cost. America's traditional allies are increasingly skeptical, and trust in U.S. leadership has eroded. Diplomatic relationships that took decades to build are now strained, as partners question whether the U.S. can still be relied upon. Meanwhile, the U.S. faces mounting economic challenges at home. Large fiscal and current account deficits have made the country more reliant than ever on foreign capital to finance its spending and investments. This vulnerability leaves the economy exposed to shifts in global investor sentiment. Deutsche Bank's Jim Reed warns that if international investors lose faith in America's economic stability, it may not be diplomacy or politics that force a change in course, but rather the relentless pressure of the financial markets. A sudden loss of confidence could trigger a sharp rise in borrowing costs and a painful reckoning for U.S. policymakers. The stakes are high. America's economic vulnerability means that aggressive tactics could easily backfire, turning intended shows of strength into self-inflicted wounds that hurt workers, businesses, and the nation's global standing. As the world watches, the question remains, will the next chapter in U.S. trade policy be written by the unpredictable forces of the market, or by the political will of its leaders? The answer could shape the global economy for years to come. The crisis erupted when President Trump threatened new tariffs on 8 key European allies, demanding support for his Greenland purchase. A 10% tariff took effect February 1st, with a threat to escalate to 25% in June if no deal is reached. This move shocked global markets and turned a diplomatic oddity into a transatlantic crisis. Only 17% of Americans support buying Greenland, making the president's gamble even more perplexing. The targeted nations represent Europe's economic core, including the UK. Trump's strategy aims to fracture European unity, but may instead galvanize it. The ultimatum forces Europe to choose between solidarity and self-interest. Rather than divide, this may accelerate Europe's push for autonomy from the US. Markets reacted instantly and severely to Trump's ultimatum, sending shockwaves through the global financial system. Within minutes, traders scrambled to reassess their positions, and the mood on Wall Street turned from tense anticipation to outright panic. The uncertainty rippled across continents as investors everywhere tried to make sense of the rapidly changing landscape. European stock indices tumbled, with France and Germany hit hardest. The sell-off was swift and brutal, wiping out billions in market value in a matter of hours. Investors in Paris and Frankfurt watched as their blue-chip stocks plunged, reflecting deep concerns about the future of transatlantic trade and economic stability. U.S. futures signaled more pain ahead, while the dollar weakened as investors sought safer currencies. The greenback's decline was matched by a surge in the Japanese yen and the euro, as global capital shifted away from American assets in search of stability. Currency traders braced for further volatility, anticipating that the fallout could last for weeks or even months. Gold surged to record highs, and silver followed suit as investors fled risk. Precious metals became the safe haven of choice, with demand outstripping supply and prices climbing to levels not seen in years. The rush into gold and silver underscored just how nervous the markets had become. German government bonds saw yields drop, reflecting a rush to safety. Investors poured into these traditionally secure assets, driving yields to historic lows. The move highlighted a global search for protection against mounting economic risks. European companies most exposed to the US, like automakers and luxury brands, suffered sharp losses. Shares of Mercedes-Benz, BMW, and high-end retailers tumbled as fears grew over tariffs, disrupted supply chains, and shrinking demand from American consumers. The pain was especially acute for firms whose fortunes are closely tied to the U.S. market. Meanwhile, defense stocks rose on speculation of increased military spending. Companies like Lockheed Martin and BAE Systems saw their shares climb, as investors bet that geopolitical tensions would lead to new contracts and higher profits for the defense sector. The market's verdict: this is a major economic storm. Financial experts warned of prolonged turbulence, and the sense of unease was palpable in trading rooms and boardrooms alike. The world's economies seemed to be entering uncharted territory. The sell-off was targeted, punishing sectors most vulnerable to U.S. trade. Retailers, manufacturers, and exporters with heavy American exposure bore the brunt of the losses, as investors reassessed the risks of doing business in a suddenly unpredictable environment. Investors are recalibrating, seeking winners in a landscape defined by uncertainty. Some are turning to emerging markets, others to defensive sectors like healthcare and utilities, hoping to ride out the storm until clarity returns. The message is clear. The world is bracing for a new era of volatility, where old assumptions no longer hold and every headline can move markets. For investors and policymakers alike, the only certainty is uncertainty. The economic fallout from Trump's tariffs could be severe. Goldman Sachs projects the initial tariffs could shave up to 0.2% off European GDP, with escalation risking recession. Research shows U.S. consumers bear most of the tariff costs, raising prices and fueling inflation at home. U.S. manufacturing, meant to benefit, is already stagnating as employers cut jobs and investment. European corporate earnings are at risk, threatening a deeper market downturn. A European recession would inevitably hurt U.S. exports, amplifying global instability. The interconnected global economy means no one escapes the shockwaves. For the UK, Trump's tariff threat is a direct hit at a vulnerable moment. With $300 billion in annual trade at stake, a 25% tariff could cost British businesses $15 billion. Economists warn this shock could shrink UK GDP by up to 0.75% and trigger recession. Prime Minister Starmer urges calm and dialogue, but must prepare for the worst. The crisis exposes the UK's reliance on the US and the risks of post-Brexit strategy. The special relationship now looks like a source of economic danger. London may be forced to reconsider its alignment, possibly moving closer to Europe. The UK faces a stark choice: adapt or face severe economic pain. The EU's response is swift and resolute. Brussels has frozen a major US trade deal and is readying its anti-coercion instrument for the first time. Plans are underway for retaliatory tariffs on up to $93 billion of US exports, targeting politically sensitive sectors. An emergency EU summit aims to ensure unity and coordinate strategy. German leaders urge caution but support strong countermeasures. The crisis could accelerate Europe's push for strategic autonomy. Reducing reliance on the US analysts see this as a turning point, pushing the EU toward a more multipolar world. Europe is preparing for confrontation, but still leaves the door open for negotiation. Amid chaos, clarity is elusive. Markets fear both the tariffs' economic impact and the legal uncertainty over Trump's authority. The Supreme Court will soon rule on whether the president can use emergency powers for tariffs, adding to the unpredictability. Some analysts expect Trump to back down at the last minute, but this is a risky bet. The IMF warns that even without a full trade war, uncertainty alone is damaging growth and confidence. The legal outcome could either embolden or restrain the White House, with global consequences. Investors and policymakers are left guessing as the world waits for a pivotal decision. The stakes: economic stability, legal precedent, and the future of global trade. We stand at a crossroads, with a dispute over Greenland threatening global prosperity. The America First doctrine is fragmenting the world economy, with real costs for consumers and workers. Europe is fighting back, ending the era of passive acceptance. The coming weeks, emergency summits, Supreme Court rulings, will decide if we face a trade war or find a diplomatic exit. The outcome will shape jobs, prices, and the world our children inherit. Stay informed. This is not just politics, but your daily life at stake. In turbulent times, knowledge is your best defense.